2025 so far has been kind of a crazy year. Given that we've just now seen the first quarter fully completed, now we can kind of start to predict how the rest of the year is going to go. Given the current administration, mixed with how the current market is trending in both real estate and stock and crypto and all that kind of stuff, it is interesting to consider how the market is actually going to play out over the next 9 months. And so I kind of want to talk today about 5 reasons that I think you should stockpile cash going into the rest of the year, as well as investing smarter. Maybe that means doubling or tripling your investments and cutting back on some excess spending. But I got 5 points today that I kind of want to go over, specifically focusing on the market trends that are happening in 2025 and how I don't really make predictions about the market. My main philosophy is just invest consistently. But at the end of the day, if the market is low, maybe it is something to consider of buying a little bit extra. At the end of the day, if I can even get an extra 1 or 2% on my money, it's hedging against inflation, while as well keeping cash when times are tough might actually create some opportunity for you. But we got to know when to start stockpiling and when to prepare for the future. So I got 5 points in this video. And the first one is going to be to build a strong emergency fund. If the market struggles and you have a solid emergency fund, not only 3 to 6 months, but maybe even beyond that, if we can get above 6 months of cash on hand with the sole purpose of covering us during a job loss, or if we have car problems, or if we have to cover our highest deductibles, things like that, it really creates an environment where you actually have opportunity in a difficult market. But having cash can help prepare you, help protect you in situations like that. So you'll be able to handle unexpected situations without needing to sell an investment at a loss, which at the end of the day is how we're going to keep our wealth, is by actually keeping our money in the market and actually investing consistency over the long haul. That brings me to point number 2. Let's take advantage of the buying opportunity. So given the fact that the market is going to probably be struggling over the next 9 months, it's going to give us an opportunity to where we can actually, on a down year, stocks are on sale. It's a fire sale. And if you've got enough emergency fund, I'd say at minimum get 10K. And then after 10K, build up to that 6 month, whichever one comes first. For a lot of people, 10K might only cover you a couple months. So get to 10K, get to 6 months, and then anything after that, let's be consistently throwing some money into the emergency fund. I don't think you can ever have too much cash. And if I meet somebody where they actually have too much cash in emergency fund, I'll amend that statement. But for right now, I think you can't actually have too big of an emergency fund as long as you're still investing that 15% or more and you're building up assets as time goes on. Obviously, if you have more than, let's say, $15,000 or $20,000 in an emergency fund in a medium to low cost area of living, then you don't really need to be throwing thousands of dollars each month into that emergency fund. But as I said, point number 2, taking advantage of buying opportunity. All these stocks are in a fire sale. And when you have that emergency fund built, you can now focus on investing. And so if you're at that 10K or 15K, consider buying some, stockpiling cash to take advantage of those lower prices. Now, there's a few approaches to this. One, you can find the lowest day that you can possibly find whenever you think it's the right time of the year. Immediately, let's max out that Roth IRA. Immediately, let's be looking at throwing an extra $500 a month or $300 a month and doing all that. You could also consider dollar cost averaging by day or by week or by month, however you want to do that. Given that this is probably going to be a bit lower of a year, what you could consider doing actually is focusing on maybe setting up auto deposits where it takes $25 a day or $50 a day or $10, whatever you can afford specifically within your budget, and focus on it actually is taking that money over time to dollar cost average over the next 9 months. And that has been proven to specifically reward it because you're actually buying these stocks on sale. Now, maybe it could go lower. I can't predict the future. But what I can say is, given this past year that we've had, they're on a fire sale right now. And just kind of looking at the markets, we want to be conscious of these things. You don't necessarily need to be sitting, reading the Financial Times every single morning before the market opens, because I don't think we need to be trading individual stocks. However, I do think that if we're going to build wealth through things like our 401k, our Roth IRA, overall ETFs and index funds, I think it is important to know how the market as a whole is doing and what exactly you're invested in. If your ETF is tracking the S&P 500, maybe it's a good thing to pull up on your phone and actually look, how is the S&P 500 doing this week? And maybe I buy a little bit extra. Maybe I keep a buffer in my checking account of $500 to $1,000. And if I think the market's at a right time, I buy. At worst, you bought at an inconvenient time, but you still put $500 in. Maybe you lose a bit of money, but at the end of the day, you're still purchasing money. You're still investing. So at the end of the day, it's a win-win. I think as long as you're not buying inconvenient like single stocks, I think you're going to be able to win. But that brings me to point number 3. How do we build that buffer of a few extra hundred or a few extra $1,000 within our checking account? It's by cutting back on excess spending. And so I've probably talked about this a handful of times, but while we do want to live our rich life, I think at the end of the day, something we need to consider is with the uncertainty in the market, reducing non-essential spending, I think can actually help you conserve cash. And more importantly, it can help you move money towards things that are going to actually build you a financial future that you're proud of. The more you can invest in the opportunities that arise, the more you are going to be able to build wealth that will impact you for the rest of your life. Realistically, for me, personally, what that's been looking like has been cutting down on the eating out, been cutting down on the takeout, on the DoorDash, on things like that. Which, by the way, guys, thank you so much for the success on the last video. If you haven't checked it out, I made a video on why paying in full and Klarna and DoorDash and all that is a terrible idea. But if you guys want to check that out, I think right now it's at 1.3 thousand views, which is insane. Thank you so much. I appreciate all the support. And by the way, if you're new to this channel, my name is Gray. I do personal finance and business content here on YouTube. So consider subscribing down below if you guys are interested in that. I try to make at least one video a week. And so, yeah, we'll go back to it though. So cutting on excess spending. Realistically, if you can cut down on the crap, on the very bad spending that is not necessary to your survival, and actually get a specific number, let's get it down to the cent if you can, of what you spend on gas, what you spend on groceries, what you need for insurance, what you have for subscriptions, actually getting it down to the point where you can actually graph it out and understand, okay, I make $5K a month, I spend 2.8. What are we doing with the leftover? Are we investing? Are we saving? Are we building that emergency fund? Are we doubling down on investments? What are we doing? And so speaking of, that brings me to point number 4. Let's consider doubling or tripling your investments, which I know sounds way easier said than done. But if you're financially stable, and again, this is a process, which over 9 months you can figure out. If you're financially stable and you actually have cash on hand, a market downturn can be a great opportunity for you to increase your investments and buy sales that are nowhere else to be found in the market. You can buy shares while prices are lower, which can lead to gains that the market will when it shoots right back up. This past year, it's been up like what, 30, 20 something percent? I don't know numbers, but all I know is the fact that the market has been doing fantastic, especially through 2024. So now we're left in a situation where it's gonna go down. And maybe I'm totally wrong. Maybe in 3 months it comes out that, the tariffs actually did something fantastic for the market and it shot right back up and now stocks are double what they are right now. And maybe we make a video at that point, kind of readjusting by then. But for now, I don't know politics. I don't know how things are going to come out. I have my opinions, but that is not what this channel is about. What my channel is about is personal finance, budgeting, business, trying to make the most of the situation we're in by building wealth for the future. And so that also brings me to my 5th and final point: prepare for the long term. Stockpiling cash now ensures that you can weather the short term and actually have sustainability through the volatility. And so by taking a long-term perspective and avoiding the kind of panic selling, freaking out, trying to cut the losses and just keep as much cash on hand, let's be honest, your cash is not actually beating inflation. At this point, as the high yield savings accounts, we're going to watch them continue to drop down. I think mine was SoFi is down to 3.8%. I've seen Capital One go down almost an entire percent. And so we're at a point where high yield savings accounts are no longer making you the same kind of cash that it did in 2024, 2023. Now we're sitting in a situation where we're just kind of hedging against inflation. Anything below 3%, we need to start considering maybe we invest this at this point. Maybe we don't need to keep it in cash, but maybe we need to invest it. But at the end of the day, I think it is very important that you continue to stockpile cash. Let's buy things in cash, not utilize debt irresponsibly, especially in a time like this when there is so much opportunity to be had where maybe we're not going to get rich quick. Maybe we're not going to cut shortcuts. But at the end of the day, I think what we can focus on is actually building wealth consistently by investing consistently, saving, and being wise with what we're doing. So, anyway, guys, if this year turns out to be a down year for the stock market, just don't sit on the sidelines. Let's get in there. Let's get a piece of the action. Let's build some real wealth. Strengthen your financial foundation by saving, cutting back on unnecessary expenses, and making wise investments for your future. Anyway, guys, thank you so much for watching today's video. If you guys have enjoyed, let me know in the comments and let me know what I should talk about next. And I hope the audio and this lighting and everything is a little bit better on this episode. I've been trying a couple new things, specifically the position of the mic. I've noticed that at least once every video, I bump the mic and I either hit the table or something like that. And so I'm hoping this audio turns out a little bit better. I guess I won't know until I actually post the video and edit it and stuff. But yeah, I hope you guys have enjoyed this. And yeah, I'll see you on the next one. Adios.